Hey everybody, how you doing? It's your buddy Uncle Bruce here from a top secret location here in Calgary. Yet another. How's everyone doing today? Welcome one, welcome all to the broadcast as we get ready for another fun week of trading. Let me just plug that in right there. We go. Another fun week of trading coming up. We've got a negative start to the day and to the week. The follow through from Friday continues. We had that Jackson Hole deal where Mr. Powell said it in 8 minutes. It was supposed to be, the rumors were 20 to 30-minute speech, 8 minutes. We're raising rates and we're going to raise them enough to knock inflation off its perch. And if it means unemployment rises and economic hardship is spread around, that's the price we're going to have to pay. No sugarcoating this statement. In case anyone just didn't quite understand the nuance of what he really meant by it all, if you were thinking that, well, maybe he'll raise rates a little bit and then he'll lower them right away and we'll go back to the Shangri-La we had for the last 20 years where we had zero interest rates, zero inflation, everything will be great. We'll go back there again. That's over. It's done. Finito. It's not happening. Just in case you were not sure of his true intentions, this guy is going to raise interest rates and a lot more for a lot longer to fight inflation. And that means, folks, you think you're going to get a 3.5% bank rate or Fed funds rate? Think again. We're likely looking at something like 5.5%, 6% within a year from now. We might raise rates for another year. We aren't done like in September, October, and that's it. That's the end of it. It's not like, well, we just raise rates for 6 months from March until October, and then everything will be fine. No, we could see consistent rate increases. Maybe not 3/4 of a point every month, but we could certainly see 1/4 to 1/2 a point every month in the new year after we get these 3/4 rate shocks out of the way to push us up into the 5.5 range. And then he wants to see the inflation thing begin to back off. And if it doesn't, it lingers, he's going to keep rates up there. They're going to stay there. And this was the other Shangri-La thing and the kumbaya moment everybody's hoping for, that, well, rates will not stay very high very long, and then they'll start to come back down. Now the talk is could take another year to get the rates as high as they have to be. And then we have to keep the rates there for 1 or 2 years before we even think about beginning to back off. And that brings us back to when I was in my 20s and I just got out of college and I was going to enter the workforce and make my mark in this world, get my piece of the action. After all, I had witnessed, my parents, struggle through their years in their 20s and 30s to make it for themselves. And they had a house with a mortgage on it, and my dad had a couple of cars, and they had loans, and they had credit cards, and they had, the living room had nice furniture in it. The rest of the house was just kind of schleppy furniture. We just, comfy. We just enjoyed ourselves, but no one was allowed to sit in the living room. Did you have that when you were a kid? You weren't allowed to sit in the living room or play in the living room or be in the living room. That was for guests only. I might be talking to older people, not the younger crowd. You didn't dare go in the living room for any reason whatsoever, because that's where mom's nicest stuff was. The china, the nice coffee table, the dad's stereo was there. You didn't go there. You didn't go there. You stay in the rec room, basement, go outside. In any event, look, they had everything going for them in the 60s, 50s, and 60s. And then I came around in the 70s, turning 21, and it's my turn now to make money. And what am I looking at? 18% prime rate, mortgages of 17, 18%, car loans, unattainable. Personal lines of credit, unthinkable People getting laid off left, right, and center, factories being closed down, companies literally walking away from North America to have their products produced overseas instead. And this went on for 15 years. This wasn't a 5 month thing. We didn't have a little dip during Ronald Reagan's presidency, and then it was all fine after that. No, we had pretty rough times through the entire Ronald Reagan presidency. We were already having tough times in the last 2 years of Jimmy Carter's presidency, and it stayed awful after Reagan left and George Bush Sr. came in. And we finally had inflation falling off during that term and into the Clinton term. The inflation rate kept dropping and dropping, and the government coffers started to build up again after a decade plus of deficits. And here we are in 2022. To fast forward it all, we've had 20 plus years of no interest rates, certainly interest rates lower than the cost of inflation. There's no doubt about that. You've been able to borrow money on a house, on a car, on furniture, on whatever you wanted through traditional lending areas for less than inflation. And at the end of the day, you're paying 3, 4, 5% for money, depending on what you're borrowing on, especially real estate. And your real estate's going up more than 4 or 5% a year. And so it's a win-win. Go ahead, take a mortgage. The house will be worth more money at the end of the mortgage than when you started. The only glitch that we had was this little thing called the financial crisis at the end of the George Bush presidency, his last year in office, when the entire world economy was imploding on itself because it was gorging on these ridiculous mortgages that had been issued to people who didn't qualify. Now, in the last 10, 12, 14 years, since 08, 09, after that financial crash, lenders got really tough because the government made them get tough. Regulators stepped in and said, you're not issuing a mortgage to somebody without an income, without a job, and you're not going to let them buy 5 houses on spec. It's one house, and they have to have proven income from a proven job. Otherwise, you can't lend them money. We're not going to guarantee these mortgages. We, the government, the people of the United States and Canada, the taxpayers of these countries are not going to insure mortgages to banks that issue mortgages to people that don't have a job. Sorry, we think that's kind of risky. Call us crazy government people, but we think that's a bit of a risk. And good news, the housing market did crater and then stabilized. And for the last 20 years, houses have done okay, generally speaking. The pandemic really raised prices of houses, as you all are aware. And a lot of folks out there have equity in homes that they never thought they would see so soon in the houses that they're in. They thought there would be equity 10, 20 years from now like they have today. But it was 2 years ago, a year ago, a lot of people went, holy crap, this house we bought 8 years ago, we had 100,000 down and we paid the mortgage down over 8 years. But wow, the appreciation of this place has changed our financial outlook completely. And those of you in the early to mid 50s, a lot of you out there, whether you're watching me or not, all of a sudden realized, you know what, we have got equity in this house that we didn't think we'd have until our retirement 10 years from now, when we were going to be 65. We have lifted up our household wealth dramatically. We're empty nesters. Should we do something about this? Is this a chance for us to make a move? Can we sell the house in Michigan and move to Sarasota, Florida? Can we sell our home in Seattle and relocate to San Diego, or wherever it is you wanted to retire to, whatever it was? Some of you want to go to Hawaii, some of you want to go to California, Texas, Florida, wherever. A lot of people did that in the last year and a half, 2 years, bigly. And these states, the Texases of the world, the Floridas of the world, have seen a huge influx, including Arizona, of northerners coming in earlier than they had previously thought they would. And that's what happened. Now, here we are today in an environment where interest rates are rising, but they're not expensive. We don't have 18% inflation. We don't have 18% interest rates, but we have this inflation rate that is, they say, 8.1% until you go shopping for something you need and you notice that whatever it is you want to buy hasn't gone up 8%. For some reason, there's a disconnect between the official inflation rate and what it is you buy all the time. And it's either you're wrong, buying the wrong stuff that just goes up in value too much, or the government numbers are wrong. Well, that can't be it, because the government's never wrong. So it's you. It's us. We're the problem. And it's just like when we make money on stocks. There's a congressional hearing to decide, what are we doing? How dare we make money in the market? In any event, look, inflation has reared its ugly head, and for some of you, you've noticed it in various places. We all notice it at the gas pump, although prices have come down. Fair enough. We've all noticed it at the grocery store. We're noticing at the hardware shop. We're noticing at the movie theater. We're noticing it at our favorite fast food restaurant. Have you taken yourself and the kids out for a bite to eat lately? Have you gone to any restaurant lately? Like, have you been to a Denny's lately? Have you been to an Outback Steakhouse lately? Have you checked out the price of some of these dinners that you and your wife are having? You get the bill and you're looking at it going, whoa, that's way higher than I thought. I remembered it before. And then you have a tip still to add to it. And now you feel guilty because, geez, I gotta pay the server something for this. And gee, what do I do? And I'll tell you, pretty tough out there. Yeah, it's more than 8%, isn't it? It's a lot more than 8%. Here's the next problem that the market is going to face in the world as a whole. Okay, we know interest rates are going higher because the Fed said so. We hear that Europe this morning, they're talking at the ECB. They're going to raise rates too. Bank of Canada, we're going to raise rates. Bank of England, fair enough. But you think about it, and you go, okay, well, so what? Interest rates are going to go to 3.5%, okay, for 4.5%. 4.75%, big deal. My credit card is 22. It's not a credit card rate. True, but there's a problem. Okay, there's this thing. All right, Julia Roberts and what's his name in that movie, Notting Hill. There's a thing. What's the thing? Okay, here's the thing. We have to have higher interest rates, according to the Fed, to beat inflation. Yeah, we know that. But the other thing is, while we've had 20 years of zero interest rates, or effectively almost nothing interest rates, the Federal Reserve has been buying bonds in the open market to keep interest rates at zero. The ECB, the European Central Bank, they've been buying bonds. Bank of England, Bank of Canada, all kinds of Western companies, including the Bank of Japan. We're all the Western countries, their bankers have been buying bonds in the open markets, plural, globally, to keep rates extremely, extremely low. The biggest buyer by far, with the biggest balance sheet, is the Federal Reserve of the United States. It reached $10 trillion of bonds. The United States government owns $10 trillion in bonds in its portfolio, or at least at one point did. It wants to lessen that over the next 5 years. It can't go to zero in 5 years. That would crush the entire world economy, but they want to lessen how many billions and trillions they got on hand. And my guess is they want to reduce it by about a third to a half over the next 5 years, get kind of going in that pattern. Here's the good news, okay? Here's the good news. The United States government bought a lot of its own bonds. So the U.S. Treasury goes to the bond market to raise money to pay for the deficit that is running every year in the United States. And the Federal Reserve buys bonds by printing money. They buy these bonds and they compete with all the other institutions for US bonds. And the US government has no trouble in financing its own deficit. As long as the world at large wants to own US dollars, it's all great. When private businesses, or let's say states and cities and counties, want to issue bonds for a new sewer system, an upgrade of the electrical grid, highway construction, whatever the infrastructure budgets of governments are, which are huge. You have maintenance going all the time. The U.S. Federal Reserve was buying those bonds too, and it allowed cities across the U.S. and everywhere else this was happening. So it's not just an American thing. This is a worldwide thing. Canadian cities, British cities, German and all, could raise cash to build out infrastructure, maintain roads and sewers and government services for a lot less interest payments than it would otherwise had to have paid, because there's a willing buyer for these bonds. It was governments themselves, the central bankers of the planet. Great. That kept tax rates lower from being raised dramatically every year. You didn't hear in LA or Frisco or St. Louis or Chicago the city councils proposed 12% tax increases on all population across the board. No, it was 2, 3, 4%, with inflation-ish, sort of like kind of, rather than double that. Well, the Federal Reserve isn't buying bonds anymore. They stopped buying bonds about a year ago. They announced they were stopping, and they did. They slowly bought fewer and fewer bonds every week, every month, until they reached a 0 point, and they just kind of held what they had. Now, the good news for the Federal Reserve is that the city of Pittsburgh and Cincinnati and Chicago and St. Louis and the state of Missouri and the state of Nevada and any other government entity, counties and whatnot, that took out bonds, they pay their interest on time. They pay their interest. They pay their bills. And the Federal Reserve of the United States is collecting payments from all the bonds they own. They've got $10 trillion of debt. They're getting paid on this debt. It's 1%, 2%, 3% interest. It's nothing great, but these bonds pay, because these are high-end grade bonds that were issued by these entities. So that's the good news. The bad news in the long run will be the U.S. government now would like to start selling off these bonds back to the private bond market to be self-sufficient. And the U.S. government in this way, when they sell off some of their bonds, they bring in cash, which then they can put back into the treasury, into the money reserve, and tighten money supply. That's called quantitative tightening. We had quantitative easing by buying bonds, issuing money and buying bonds. Now it's the reverse. So the problem here is that the bond market is going to shrink in size with the available amount of capital that is available to be played with, borrowed with. The U.S. government and the Bank of Canada, the Bank of England, the ECB, all the central bankers will slowly but surely begin to blow off their bonds, sell back bonds into the market in a very slight way. They're not here to crash the market. They're not here to affect a massive problem. But the reality is that as each week goes by, each month goes by, each quarter goes by, we're going to see more tightening of the money supply. And this is where the next shoe will drop, because we keep wondering, when is this party over? Why can't the market go back into all-time high levels? People ask all the time. And I'll tell you why. Because the available amount of cash to be able to acquire stocks is going to become harder to come by. And economies are going to slow down because the lack of liquid capital that is going to be flowing between economies is going to back off, partially because of higher borrowing costs to borrow money to do business and the lower money supply to do business with in the first place. Now, the one entity that seems not to be necessarily cutting back on its spending, although it fluctuates and it's seasonal, but governments as a whole, especially federal governments, have a nasty habit of running deficits because federal governments are very sensitive to polls, and politicians like to get reelected all the time. All the time. They never want to quit. They never leave. And so, what do you do to get reelected? You bribe your voters with government spending programs in their districts so that they reelect you, because then you are a doer and a creator of wealth and jobs, and you're the kind of elected official that should be reelected. And so Mitch McConnell makes sure Kentucky gets its fair share of handouts from the U.S. government, far more than it pays into the United States, by the way. California gets its, New York gets its, Texas gets it. It's all the rage. And it's done at the local level, the state level, and the national level. But the national level is where the spending is unlimited. In Texas and in Washington State, New York State, you can't go and just borrow money willy-nilly and run deficits. There are constitutions, state constitutions, that forbid certain states from going into debt whatsoever. And so what happens is the federal government is the entity that goes and borrows a bunch of dough. That's the one. And there's no limit as to how much it can borrow because it's the number one economy of the planet and all the good stuff that America brings to the world. Well, that's great. The problem is if the United States government is going to continue to borrow money, and the Canadian government's going to do it, and the UK government, trust me, they're borrowing big time. Europe is going to keep borrowing because they're running deficits. They're in a recession. The competition for money is getting tighter. All of a sudden, you have governments wanting more money than they needed before because they have to borrow money to pay the debts they've been carrying and the new deficits they're running. Inflation is also costing government more money to operate. It needs more money. And businesses need cash, and you and I need cash. Now, you want to go and get a mortgage on a house that you're thinking of buying, or you want to borrow $100,000 on your house to build a garage to your house, or reorganize your life, you got to borrow that dough. You are competing with everybody else for available capital. Now, you might think, well, I only need 100,000. I don't need 100 billion here. It's a small amount of money. That's true. But banks have to spread out the risk when they lend money out, and they've got to lend it out to those who they know can definitely pay. And they will tell you in no uncertain terms, one, if they'll even lend you the money, but two, if they would, what would it cost you to get it? And some of you may find in the next 2 years a shock when you do talk to your loans officer or banker, or you do this online going forward. Based on your existing situation, it's 2 or 3 percentage points more than you thought it was going to be. You didn't think that you'd have to pay as much as they're asking. And you're looking at the Fed funds rate and saying, Bruce was talking about the Fed's funds rate at 4.25%. Why am I being quoted 8.5% on a second mortgage? What's this all about? I have a job. I have a full-time job. I've been working for 15, 20 years. We've never missed a payment. Why am I at 8.5%? Because the competition for the remaining capital that's out there is higher. And the car companies need to borrow money so they can then issue car loans at the dealerships at specifically low rates. Mortgage companies are borrowing money to turn around and lend it to developers to build out subdivisions and then to re-lend that money out to buyers to take the houses off their hands with a margin. There are credit card companies that are borrowing money to lend it out at 20+%. They're going to go after it. And there's governments going after money to fund their operations. And this is just, 5 of millions of reasons why there is money to be borrowed by everybody. But if the money supply is shrinking, that means the cost of whatever money can be lent out will go up. It's a law of supply and demand. It's nothing personal. It's just business. And so you may find that you thought you could borrow money at 4.5%, 5% against your house, and you're finding they want 8.5%. And some of you out there who are going to move because you have a job opportunity somewhere, or you're retiring to where you wanted to retire to, and what you're hoping to do is sell what you got, buy something else. You're carrying a mortgage where you are, but you have some equity and you want to just roll that equity into your next place and borrow against the rest. And you had a mortgage at 3.5% on the old house. You're now shopping for the new house and they're quoting you 5.5%, 6%. And you can't get a rate down at 4.5%, because that's where you thought you would be with a 4.25% Fed funds rate. You thought 4.5%, 4.75% for a mortgage, and it's 5.5%, 5.75%, in some cases over 6%. Competition for money is going to get higher, and this is the problem for now the stock market. I'm finally coming to the stock market because corporations like Target, Kmart, Costco, Lowe's, Home Depot, and all of their suppliers, and all the home builders and all the car guys and all the car repair people and the furniture people, the entire economy of the United States and Canada and the world lives off of cash flow. Cash flow, baby. Sales, money into the cash register, money out of the cash register, money into the cash register, money out. Keep that warehouse full of inventory back there, bring it into the front of the store, fill up the shelves. Here come my customers. Sell, buy more, sell, pay bills, buy more. When you interrupt that with a cash crunch, the first thing that happens is people realize, I can't get a loan under 8.5% for a house remodel that I had in mind, which means either I'm not doing it, or if I do this, I'm going to cut spending somewhere else, because this payment is $500 a month more than I thought it would be under the terms that I've had to sign off on. I'm going to cut $500 in spending. That's one household. How many more are we talking about? And this is where the billions of dollars a week in spending dries up. And that means, yeah, you're going to Home Depot, but not every 2 weeks. You're going to Home Depot every 6 weeks. You are delaying your trip to Target until next week. You're waiting until payday. Then you're going to Costco. You're going to subtly, in little tiny ways, across hundreds of millions of people in the world, adjust your shopping accordingly to what you have available and what you feel comfortable spending. And as a whole, those who track the big numbers, they realize retail sales are going to be off by 5 or 10%. And if that happens, it's a chain reaction, like a domino effect, as it spills out. A pebble in the middle of a pond that is absolutely still, the pebble lands and the ripple effects go all the way out, and they go everywhere. And that is including publicly traded companies. If you've got a hankering for a brand new iPhone 14 and you're sitting on an 11 or a 10 or a 9, you want to move into an iPhone 14, if you delay your move by just 3 months, you screw up Apple's numbers dramatically. And if you screw up Apple's numbers dramatically by holding off before you buy, you want to buy, but you're holding off before you buy, Apple will affect the entire stock market, because that's how it works. And all the suppliers to Apple will also be backing off. All the competitors to Apple will back off, because if you are holding off on your iPhone, a friend of yours that loves Samsung phones, they're holding off on the Samsung or whatever the other brand they're into. And if AT&T notices, and Verizon, and all these providers of cell phones and phone plans, they get their customers holding off, their numbers go screwy. And if that happens, it just continues on like a domino effect throughout every part of the economy. And this is where the policymakers are worried that, if we raise rates too high too fast and cut back on the money supply too hard too fast, we could really slow this economy down beyond the idea of holding inflation down. We could create damage, real damage to the economy with massive layoffs, massive holding back of expansion projects. A lot of infrastructure will be on hold. This is a problem, and it's a problem eventually for governments, because again, I told you that you could say to me, well, Bruce, you're blaming the government for everything because they keep borrowing money. Eventually, governments stop borrowing money too, because governments will realize, we're going to have to put off the rebuilding of this major interchange of this highway system for $200 million. We're going to have to delay it for a year. We're going to have to delay repaving 25 miles of the interstate in our state. We'll just do pothole repairs only for the next year. You've seen it. You've witnessed it. You know what I'm talking about. Bridge repairs get delayed, sewer repairs, and then we have failure of certain infrastructure from time to time. And this is where it's just a domino effect across the entire spectrum of finance. The Federal Reserve eventually has to decide, do we continue tightening or do we ease up on tightening without lowering rates? We'll keep the rates where they are up here, but we'll stop selling all of those bonds. We'll hold off and just lay low for a while and not make it tighter. Is that enough to stabilize the economy? If not, we'll do quantitative easing. We'll keep the rates up there. We'll talk the talk, but we'll walk this walk. And we'll ease up on the money supply. We'll allow more to go out. And ultimately, beyond that, if we have to, we'll lower rates to spur on the economy. But not too much, because if it spurs too much, people will get too excited. Do you need to get by?
Yes.
Okay. Hang on one sec, folks. Okay. There we go. You're good. Hello, everybody. I'm back. Jennifer had to sneak around the camera to get to the bedroom. We're in a wonderful secret location. The problem with it is that over here is where the bathroom is, and over there is where the bedroom is, and it's a separate room. The problem is one must go across, and we're not going to show off what could be shown up. In any event, there you have it. There's my little rant for the day to get you thinking about the markets. The talk right now is that the markets are going lower because there could be lower earnings coming up. And if we have a tightening of the money supply, as I know is coming, higher rates, I know that's coming, higher inflation, it's here. Inflation goes even higher. The talk will be about higher rates. And that will create an even faster meltdown of the markets, because our friends at Apple and others companies, their PE multiples will be brought into question time and time again by analysts. And the analysts will go, you can't have Apple shares trading at 160, 147, where we are right this second, down 215, because Apple's PE multiple is 27 times right now. It should be 17. Well, if analysts are saying Apple's PE multiple should be 17, and Apple's earnings aren't going to rise like they used to rise a year ago and the year before that, when we had record quarterly results from Apple that were just mind-blowingly incredible. We get back to normal for Apple with 8 to 10% increases in earnings. The stock's ahead of itself. The stock is too expensive for what the company is generating. No matter how many shares they're buying back, they can only buy back up to 5% of their stock per year. They're limited. They can't buy it all back in 1 year. It takes 5-10 years to slowly but surely eat up stock. The stock will back off, and that means the PE multiple will come down. And the problem there is that shareholders out there are going to go, I'm not making money on my stock, especially pension funds, hedge funds, mutual funds. Where you guys come in, who are watching me right now, 278 of you are on the edge of your seat, can't wait for what I'm going to say next. The good news for you guys is you're option writers. If you're with this channel, the odds are you've become a writer of options, or you're really looking into it because you're wondering, what's all the fuss about over at Bruce's, Uncle Bruce's stock channel over there? Why are his viewers always so happy when the markets drop 1,000 points? It's the only channel that where they're smiling. All the other channels are in a doom and gloom mode. What is up over with those kids at Uncle Bruce's channel? And the reality is, a lot of you figured out, we write options on stock, whether they go up, stay flat, or go down, and we take cash out of our account because of it. For some of us, all we do is write options, take the dough, and buy more stock with it that we like to buy into and write options on it, or we buy stock options deep in the money on stocks we want to write options on and write more options on those, or we buy some of our favorite former SPACs that are super cheap right now. We take this cash and we average down on our SPACs. Down, down, down we go, because we know in the end we're going to win with some of these companies sitting on upwards of 500 million cash and no debt in a bear economy. That's what we do here. Many of you are figuring out, yeah, that's right. If Apple, which was trading last week, week and a half, 2 weeks ago, Apple was trading around 170 to 174 a share. It's now 161 on the pre-market. If I'd have written 175 calls, 180 calls, and then as it dropped, I was writing 174s, 172s, $170 calls last week. I was writing 168s last week. I'd have been making a fortune here. Yeah, that's right. You, at the very least, would have an insurance policy against the down dip of your stock. I mean, whatever you're making on the call, as your call option drops, you sold it up here, you're going to buy it down here, helps compensate for your stock falling off. And as you buy back calls, you write new calls, and it just keeps going. You keep this game going. Eventually, the stock will level off and maybe even rise a little bit. You're writing calls no matter what direction it goes. You're constantly bringing in cash from your Apple and from your Microsoft and from Google and Amazon and HPQ and Cisco and Pfizer. We talk about this all the time. That's what we're doing here. People here are writing options on stocks they probably own or would like to own, are going to own for a long, long time, and they're going to be paid for their ownership. Number of you have gone here. You've gone to my website, stockmarkerswithbruce.ca. You've noticed over there is this guy, a familiar looking face, kind of like me right there. And you end up going to the tab that says classes, and you end up over here. And once you get to here, you scroll down and you notice he's got lessons. Look at that. How to buy, call, and put stock options, how to write, call, and put stock options, and on go these classes. 2, 3, 4, 5, 6, 7, 8, earning income from writing put contracts. 9, 10, how to trade, call, and put butterfly options. How does Uncle Bruce pick his favorite stocks? How about using poor man covered call writing strategies to quit your day job? You ever heard that one before on any other channel? I don't think you have. There are folks out there who are saying, you know what, I'm going to take Bruce's classes. I'll take one here, take one there. I'm going to learn how it works, how option writing works. And a number of the folks who are here right now that you're seeing typing right there, that's exactly what they've done. They've taken classes and they're hanging out here with the option writers, because that's what my members are. My members here are writers of options. They compare notes with each other all the time. And I welcome you, and I offer that to you to join us. Become a member of this channel. Become either a Chillin' with Uncle Bruce member or become a Gold Bagel member, one of these top members right here. And join me every day before 8:30 in the morning for the Trade Alert Show, 8:30 right here, 3 o'clock in the afternoon, last hour of trading during the day, and Wednesday night. Join me for Primetime Live with Uncle Bruce. And get yourself educated on how to write options. Did you need to go by again? Yes, man. Come on over. Come on. Hang on, folks. Here we go. Right on. So we're learning how this works. We're doing it. We're taking money in off the market, and we're in a bear market scenario where they're just handing it to us again and again and again. It's gratifying to find out how many of you are benefiting from writing options. You make it known without question right here during the day. A number of you send me private emails letting me know, and then there are a few of you who like to get together for one-on-one hangouts with me privately to kind of review where you're at, how you're doing, what you're doing, get some advice. If you would like to do a one-on-one hangout with me, I usually do them on weekends. Lately, it's been on Sundays. It's about an hour of time. Send me an email and say, Bruce, I'd like to have a one-on-one with you. When can we do this? I'm available anytime between so-and-so and so-and-so on Sundays. Let me know. I'll set that up for you, and we'll get together. I do charge $400 an hour for a 1 hour session. But I can tell you that you just write one option, say every couple of weeks on, say, GameStop or Apple or whatever, you'll make more than $400 a month on your option depreciation. That'll more than pay for it. Again, you let the gamblers on the option floor pay you for you to hold your stock and be rewarded for it. And it's a beautiful thing. Anyway, this bear market is perfect for exactly what we're doing here. This bear market is absolutely paying off handsomely for the viewers of this channel, and you're invited to join in. And I suspect that of the 290 odd that are here now, I would bet you 90% of the folks that are up there are already option writers, and more are joining this group every week. You don't write as a group. You're individual. You do your own individual thing. You write options on whatever you want to write options on for as long as you want them to exist, for whatever risk tolerance you have. But generally speaking, writing options is a conservative strategy in the marketplace, and it has been utilized since the 70s, since options were really invented and popularized. Hedge funds, pension funds, mutual funds have been writing options from day one. That's usually where options have come from. There has to be an option writer in order for there to be an options market. You cannot have millions of people buying and selling stock options all the time on virtually every stock and ETF out there unless someone wrote options to create them. And that's where you come in. You're actually adding liquidity to the stock market by offering options on issues that you own, stocks that you own, or deep in the money calls that you have. And you're taking your share of the action off the top. That's all it is. And you're, generally speaking, you're writing a call option up at this price, and you're looking to buy that sucker back down here somewhere. And you're going to keep the difference. You're going to keep the change. And a market that backs off, or a market that is flat, or a market that moves up but not so much, options depreciate against these kinds of markets. And no matter what stock you write them on, they just generally depreciate. Yeah, there's the odd outlier where a stock will go up, have a nice little run for a while, but there are strategies in place where we take care of those issues. We do rollovers all the time. We talk about it, we study it, and it pays us out in the end, because the first thing that you find happening is that your account is worth a lot more money because your stock went up. The second thing you realize is you're rolling the option over into a further time frame at a higher strike price, and your account just gets more valuable and more valuable. And rollovers are not a bad thing. They're actually an okay thing. In any event, welcome one and all to my show and my channel here today. It's great to have you here. If you're a member of this channel, your name is highlighted in green with a little emoji beside it. You have reached. You're one of the top supporters of this channel. I thank you. Whatever level of membership you've decided to utilize, thank you all for being here. Those of you who are subscribers, thank you for being subscribers of the channel. Please become a subscriber if you haven't done so already. We'd like to grow that number. And then those of you who are just lurking about, watching for free and hanging out, you're more than welcome to be here and learn what it is we're up to. Keep an eye on us. And if you find that you like what you see and you like what you're learning and you're finding it educational and rewarding on a remuneration basis, please do consider becoming a member to join our gang and chat with us, and or become a Gold Bagel member and join us Wednesday nights for Primetime Live and also every morning before the 8:30 show. I'm going to shift now the chat to members only, because that's what we do as we come into the trading hour. Thank you all of you who are here in whatever capacity you're joining us in. It's a pleasure to have you. We appreciate it. And thank you, those of you who have been so kind to my Jennifer Aniston lookalike wife and I, who have been making donations to our PayPal account, or to making super chat donations, or doing banners and all that kind of stuff. You guys are great. We really appreciate it. Everything helps. This channel survives on.
I'm going for breakfast.
You're heading? Okay, I'll see you later. Okay, this channel survives on donations and also from memberships, and we thank you all so much for everything. We have 144 thumbs ups. Thank you for that. If you're able to hit that thumbs up button and add a little momentum to this channel, thank you. That would be much appreciated. You guys are absolutely so generous with the thumbs ups compared to what I see other channels. It's absolutely fabulous. And we're looking at headlines coming across here. It looks like that rocket launch has been delayed until at least Friday, according to reports out of NASA. They have technical issues, first time ever and all that stuff. So. All right, Jen, we'll see you later. So it's just what it is. The markets are doing what they're doing. We're off 237 on the Dow with 13 minutes to go. We're off 32 on S&P, and we're off 120 on NASDAQ. 0.75 of a point to about 1 percentage point lower is what we seem to be looking at. Oil is up 94 cents to $94 a barrel. Keep in mind that there's talk out there, and there's a lot of promotion going on that oil is going to go higher, that there's tremendous shortages in the pipeline systems and in all the supply systems. I don't buy it. I just don't see massive lineups of people trying to get gas. If we truly had oil supply and gasoline supply issues, you would be seeing lineups on the news from wherever the lineups are, whether they're in America, they're in Europe, they're in Africa, South America, Asia. It doesn't matter. Even if downtown Moscow had problems, you'd see it on the news. We don't see anything anywhere like that. The other thing we don't see, price gouging. What we don't see is gas price gouging at the pump wherever there's shortages. Now, the odd third world country where there's one gasoline station for every so many thousand people, that's another matter entirely. I'm going to concentrate on the G20, where the action is and where the money is, trustable. There is no issues. And the other thing that keeps getting poo-pooed and ignored by those who cover this business is the reality is that in the last 6 months, world production of crude is up and is still climbing and will continue to climb at least for another 6 months. There are stories out there, and I believe it, that certain oil and gas producers in certain regions of the world are having issues getting oil out of the ground because of lack of uh, parts, infrastructure, equipment. I get that, but this is not creating any kind of an emergency flow of oil problem. Nothing like it whatsoever. The Middle East is drowning in this stuff. They are producing barrel after barrel and they're selling it. They're even talking about trying to cut it back to raise prices higher. They want prices in the 120 to 150 range, which of course is like blackmail to the Western world. But hey, it's all fair in love and war. The Western world is addicted to higher oil prices, especially governments. You may think that Exxon wants higher prices and Chevron. They don't mind it, but I can tell you who really loves higher prices. Western governments love higher prices for crude oil and natural gas. They get royalties and excise taxes off of every cubic foot of gas, every liter of petrol, every gallon of US gallon of gas. You buy a quarter thing of a quart of motor oil for your car, the US government is getting their share, and so is Texas and Oklahoma and everybody else. Governments love it because it is a silent tax generator that no one loses votes over. No politician gets voted out of office in Washington or in Ottawa in Canada or in London, England, because of oil prices, excise prices, taxes coming in from petrol. We all complain about it. We all bitch about it. We don't like having $5 barrel, $5 a gallon gas, $6 a gallon gas, $8. We don't like it. But oh, are we addicted to what we get from it, depending on where it is you live. Now, in the USA, Americans are one of the least taxed people for energy in the world on a per gallon or per square foot, cubic foot basis. In Canada and Europe, it's much, much higher. And Canadians complain about the price of fuel, but we don't complain about the government services that this pays for and our national debt that we silently know, we as Canadians and Europeans, we all know we have debt that we've accumulated from our deficits. They're being paid down from energy prices. Partially, it's taxes from income tax, yes. Corporate taxes, yeah. Sales taxes, and then there's the energy end of it. And the higher prices go on energy, the more money coming in. And where I am in a secret location in Calgary, in this town and in this province, the dough is flowing big time. And one way to know if dough is flowing in your hometown is when you take a look at what rents are in apartment buildings and in houses. Any landlord in this town is having a field day to rent whatever they want to rent out at because they're getting top dollar from people who are earning top dollar from the oil patch. When I say oil patch, I mean the natural gas business, the oil business, the refinery business, the exploration business, the entire business of the oil patch. If you're a lawyer, you're an accountant, you're a hairdresser, you're a bartender, you're a waitress, you work at a Lowe's or a Home Depot or a Costco, every store is busy. All this town is on fire economically at every level. And there are people here saying, I'm not in the oil patch. I prepare tax returns for people. I'm not in the oil patch. Yeah, well, the folks who are coming to you to get their taxes prepared by you are making money because of the oil patch, either directly or indirectly. That's what's really happening here. There are people who deny that they have anything to do with the oil and gas business, but they do, whether they like to admit it or not. This town is on fire. Edmonton is on fire. This province is rolling, really rolling economically. And the good news for this province is that they've had to go into deficit spending the last 5 years because oil was underwater for a good long time. And it's all coming the other direction now. And so these dollars coming into the provincial coffers allows the province to pay off this deficit spending. They're now in a surplus, actually, and the surplus is now going towards IOUs. And of course, you know what's going to happen next. All provincial employees are going to ask for significant raises because of years and years of austerity, number one. And number two, inflation, like higher rents. The rent in my apartment has gone up $300 a month, $500 a month, $800, whatever the story is. That's the next thing that we're waiting on. Time will tell. We've got 5 minutes to go before we open for trading. Hope you don't mind the long rant today. The markets are still off. 240 points on the Dow, 34 on the S&P, 137 on NASDAQ. Markets are down. They're going to be down for at least the first half hour to an hour. We got to see how much follow-through selling, is coming into this market from Friday's Jackson Hole sell-off after the 8-minute speech by Mr. Powell. I got to credit him for just doing what he had to do. You wanted to say what you wanted to say. Don't give me a 45-minute gobbledygook message that I can't understand like Alan Greenspan used to give. Get to the point. What is it you want to say to me? And say it in plain English. And he did that. No one listening to that speech, really, almost no one, could have said, I don't understand what he's saying. No, I think we know exactly what he's saying. And whether you like the message or hate the message, you've got to respect the fact he got it done in 8 minutes. Now, get back to work is what this guy is basically saying. Stop wasting your time listening to me in Jackson Hole, Wyoming. Get back to your cubicle, back to your factory floor, go back to your analytical desks, wherever you're doing. Oh, and those of you watching Uncle Bruce, hang out with him because you're learning how to make money in this market by writing stock options. That's exactly what he said. In a kind of a way, that's what he meant. And so here we are. Option writers, welcome one, welcome all to the channel. 305 of you are here now. We're about to start trading. Let's get going and make some money today. GameStop is $30.25, down 69 some odd cents. Apple down $2.30 to $161.32. We've got pressure on the markets. Obviously, that's to be expected. I'm showing right now pre-market trading. Rocket Lab lost 21 cents on Friday. It's down 24 cents in the pre-market. We have SoFi was off 51 on Friday. It's down just a dime this morning. GameStop down $1.02 Friday, down 70 right now. AMC was off 40 cents. It's now down 17 more for the common stock. The AMC Ape shares were off 33 on Friday. They're down 38 now. So you take 38 plus 18, and that's 56 cents of leakage on AMC combined at the moment. We're now barely pushing $15.12 combined value. Matterport lost 16 cents Friday, down 7 cents right now. At 23andMe was off 45 on Friday. It's down 17 now to 324. Spire lost 8 cents Friday, showing a 9-cent drop so far this morning. ATIP lost 6 cents on Friday. It's down 2.6 cents now. SmartRent dropped 12 cents Friday. It's up 9 at the moment. Sextera lost 71 on Friday, but it's down only 4 this morning. Apple lost $6.40 to close at $193.62. So it went from $170 to $163.62 Friday night. Now it's $161.10, down $2.53 again. Goldman lost $10 on Friday. It's off $2.30 at the moment. Cisco down $1.38 Friday and now down 3 more cents. We're now 2 minutes away from opening. Tesla down $7.98, down $5.21 this morning. Arc Innovations lost $2.94, down 98 more cents. Microsoft dropped $10.76 on Friday. It's down $1.72 more to start the morning. Bed Bath Beyond was up 60 on Friday. It's up 76 now. The reorganization, there's just a lot of speculation they might make it. I don't think so. I think it's a short. Pfizer down $1.08 Friday, down 41 now. HBQ down $3.08 Friday, down 22 more cents. Carvana down $2.95 on Friday, down $1.19 now. Twitter down $59 Friday, down 34 now. We're about to open. Alphabet Google down 640 Friday, down 52 now. Amazon down 653, down 69 cents right now. We're just about to start trading for the week, and we're ready to roll. Larry is going to hit us with the bells, I hope. Thank you. Thumbs ups meter is climbing. We're at 165. Thank you for hitting the thumbs up button for us. Nail it if you can. We only need 35 more thumbs ups to hit 200 already on this morning's show. Thank you all so much for helping out on the thumbs ups. 165, 35 away, now 33 away at 167. Keep those thumbs ups coming in. There's 172, 28 to go. Thank you, everybody. Let me know what number you are if you can. And I appreciate the help as much as you can provide it. We love it. Okay, we are about to go. I think we're up. Where's Larry? There he is. Here we go, says Larry. Whoa, YouTube rejected my bells. There they go. It's good now. Their bells have been rung, and it's official. We're up and we're running. And away we go. Bama Babe, does anyone besides me write so much that on Monday, when you open your account, you find a write that you forgot about? Laughing out loud. Oh my gosh. Unbelievable. Thank you for being here, all of you. Hopefully you're writing calls for this Friday expiry or next Friday expiry, taking some dough. Remember, next week, Monday, is Labor Day. So if you write an option for next Friday, not this one, but next one, only 4 days of trading next Monday. So you want to get those September 9s written this week to take advantage of that. Maybe just a glitch, says Larry. Wing Commander, Uncle Bruce, I got two questions. I have approximately 15 grand in ETFs. I'm down 6% on this year. Sell this stuff before the next dip. Get deep in the money calls. Good for Jan 24 and start writing. Also, what about a one-on-one this weekend? One-on-one would be for Sunday, 10 a.m., noon Eastern, or 2 in the afternoon Eastern time. So 10, noon, or 2. Let me know with an email. ETFs, yes, you could make the move where you sell your ETF and buy deep in the money calls on the ETFs for 2024 and start writing. Yes, that's an idea. Leverage up and get it going. Or just write on the ETF if you happen to have 100 units. But if you don't, and you can sell the units and then buy 1 or 2 or 3 deep in the money calls, you're going to write 1 or 2 or 3 options against those calls on those ETFs. And the first 6% you make on option premiums, which shouldn't take you long, takes care of the downside, doesn't it? Now it's all upside from here, and away we go. And this is the same whether it's stock or ETFs. It doesn't matter. If you're sitting on 100 shares of IBM and you're writing 1 call option, fair enough. That's okay. There's nothing wrong with that. You're taking a 5% yield on your dividend and you're writing 1 call. That's great. On the other end, what you could consider doing is you could consider selling the shares and buying deep in the money calls that might be $25 in the money, and you could probably get your hands on 4 call options, probably. And now write 4 calls at a time instead of 1 at a time. So it's 4-to-1 leverage. You're bringing income in from 4 calls, 1 or 2 weeks long each, and you're giving up the 5% a year yield that you were getting, the dividend, but you're replacing it now with 400% more option premium on that amount of money that you're writing on right now, just 1 at a time. That might be an incentive for you, where if you can bring in, say, $2 a month in shrinkage on IBM contracts, that's $800 a month in income coming in instead of $200 a month in option income plus the dividend. And that would put you way ahead, and that's all capital gain. Something to consider. Can be done on anything else you're working on. The other thing that I'm finding is a lot of you would like to be writing 5 or 10 contracts at a time, not 1 or 2. Another strategy to consider is to take a look at HPQ shares. That's Hewlett Packard HPQs, because HPQs are trading around this. Let me get this thing up here if I can find it this morning. HPQ 31.24, they're down 15 cents right now. You can get your hands on $22, $23 contracts, $24 contracts, $20 contracts. I would bet you around $800 to $1,100 you can get your hands on a deep in the money HPQ contract out to 2024. Just check your option chains. And now you can start writing on those. And if you can bring in $1 a month on a $1,000 contract in option depreciation, that's 10% a month on your money. Think about that. You got 20 grand lying around. You can buy 20 of these things, ballpark, write 20 contracts at a time, and bring in $2,000 a month from $20,000 on a top-notch company. I don't know where the problem is here. This is conservative. I'm not talking about high-flying, high-beta, incredibly volatile stocks. I'm talking about HPQ here. You can do this with Cisco. You can do this with Pfizer. These are stocks that are priced in the $40, $50 range. You can easily get your hands on $1,000 contracts deep in the money. It might be $9 in the money plus $1 premium, and write. And you could theoretically get much more than $1 a month from these contracts. It depends on just how far out you write, how close into the money, how far out of the money. You have to study your option chains, take my classes, learn this stuff, and become prolific at writing options, and let these stocks pay you to hold them. I mean, geez, even the calls, deep in the money calls, you're going to be paid, compensated for being a deep in the money call holder. Keep in mind also, if you buy 10 deep in the money calls for $900 a piece, $1,000 a piece, over the next 6-8 months, the shares slip up to about, say, $6 higher, which is nothing burger. Your calls go up $6 a piece, those deep in the money calls. You'll be writing options ahead of those calls. Every week or two, you're rolling over into new options. Look, if you can take a $1,000 call and turn it into a $1,600 value call, you sell it for $1,600, turn around and buy a $1,000 in the money call for 2025, you've just added $600 to your net worth. 10 times, that's $6,000. You just added 6 more calls. You're now sitting on 16 calls, not 10, because you sold the 10 for 16 each, bought 16 for $10 each, same amount of money, and now you're writing 16 calls at a time. You've just given yourself a raise. If you could pull in $1 a month, you're bringing in $1,600 a month, or whatever the number is. This is what I'm talking about here. If you go from 20 to 30, or 10 to 15, or 30 to 45, you can see what I'm talking about. The leveling up of more options and more options and more options of income coming in. It's the same trade. You're just writing this one call and buying it back, and then you're writing this call and buying it back. It's just, how many are you doing? 1, 5, 15, 30? That's all it is. It's the same trade, just quantities. Don't worry about taking over the market. You're not taking over the market. Dilbus, I'm thumbs up 177. Thank you, Nick. I am shorting TOL today. FL short looking real good. Wing Commander, I was thinking something along the lines, deep in the money calls on HPQ, GameStop, etc. I will shoot you an email regarding a one-on-one. We'll take care of you. Sell my house fast over Marlboro. HPQ, $23 strike expiring January 24 is worth $10.05. $10.05. These HPQs, where are we at? A 31.48, and you can grab a 23. Right on. It's worth $8 something. A little expensive, but that's 2024. I don't mind that price. If you can scoop it there, any less than that, you're stealing it, I would say. Keep an eye open for 22s, 24s, 21s to see what you can do. Alberto, GameStop $32 call expiring September the 9th for $1.99. Right on, sir. Taking the money. He's taking in $200 on a contract for September the 9th expiry. That's after Labor Day. It's only 4 days next week, 5 days this week. It's a 9 trading days. He's being paid about 22 cents a day, getting paid 22 cents a day in depreciation. for this deal. Something wrong with that? Nothing wrong with that. It's out of the money. The stock's 30.85, 115 out of the money, and he's being paid 22 cents a day in depreciation. Do that 10 times. That's $220 a day in depreciation into your pocket. $220 a day for 9 trading days. You're being paid if you have that many calls. Just think about that. Poor man cover call strategy might be the way to go. Good morning from Splair. Good morning, everyone. 10 times. There it is. Laughing out loud. I'm reading his mind. You got to love this. Exciting stuff. Those of you who are writing 5, 10 contracts, congrats. Those of you writing 15, 20, 30, way to go. There are those who are watching this channel who are writing 50, 100, 120 calls, 150 calls at a time, 200 at a time. You think about this, if you can write 100 call contracts on a stock and it goes 1 dime, your contract drops a dime in value. That is a $10 drop per contract. That is $1,000 to you. It is $100 a penny leverage to you. And it's an option that's out of the money, that dies this Friday. Time's up. It runs out it expires. If it's in the money, it's got value, gets exercised. If it's at the money, it has no value whatsoever. If it's out of the money, it is zero. And you can keep all the premiums up to you. Whether you take a 10-cent gain, a 20, a 40, a 70, 250 gain, all depends what option you're writing and how many you can write. How about that? What else is going on here? Nick, I had bought 2,000 BBBY, average 1093. I got out at 1153. Run, Nick, run. Right on, buddy. Stay the hell out of there. Right on, buddy. We're down 215 on the Dow. AMC is off 7 cents. The APE shares are off 57 cents. That's a 64-cent drop today on those combined units. GameStop is up 21 right now to 31.15. It would appear, trying a little anything rally if that's possible. The low was 30.39. The high 31.24. Now 31.12. SoFi 621 up 3. ME up 2. Matterport up a nickel. ATIP 91 cents up, down 1.6 cents. Rocket Lab down 12 to 518. Smart Rent down 5.5 to 339.5. Spire down 3 to 144. Sextera down 14 to 664. Bed Bath Beyond at 1097 now, up 27 after hitting high of 1159. Nick, way to go getting out of that. Way to go. Tesla down $1.18 to 286.91. Pfizer down 51 cents. Boeing down 22 cents. Apple down $1.28 to 162.34. HPQ 31.56 holding a 17-cent gain. Low today 31.37. Low today. Let me just hang on a second. I'm waiting for this to clear up here. HPQ down 171, 32.76. Pardon me, my machine is off. Not operating properly. Apple 170 down a penny. Boeing up 140. Pfizer down 11. Tesla up 54. Bed Bath Beyond 1103. Just catching up on these quotes, everybody. Sorry about that. Sometimes it glitches. I've got the Dow. Now I'm not sure who to believe. I've got 2 different prices on everything, so I'm just going to wait a while before I rattle off prices because these markets are goofy today. Shares HPQ earnings tomorrow. I'm waiting to write this time. Right on. See what it does for you. Those of you who made money last week, way to go. You wrote Monday and Tuesday calls. You bought them back on Thursday, Friday. You scored beautifully. You've written calls for this Friday. Options are already dropping because the stocks have dropped further. Well done, everyone. I think it's fantastic. I've been reading articles about this quiet quitting thing. I just laugh at it. I chortle at it. There are actually people suggesting that some people try to make other people feel guilty because they're quiet quitters. I find that absolutely ridiculous. There are those who give way more than they need to. More power to you folks. Then there are those who provide the services they've been hired for. Way to go. And then there are those who provide less than what they're being paid for. And if your supervisor doesn't catch that, that's the supervisor's problem, really. It's not yours. But if you are working your, allocated hours and you're doing the job you've been asked to do, and let's be frank, how many of you out there are working pretty damn hard just to meet your quotas? It is unbelievably difficult to meet what you were expected to do. Don't tell me you're sloughing off by just doing what you're paid to do. You're working hard. This notion of I'm supposed to now put in an extra 20% for nothing because I'm loyal to the cause, that is crap, complete crap. That is an employer exploiting their workers for no upside whatsoever, because that is a firm as a whole that's trying to get 120% performance by only paying 100% for the performance. That is a firm you leave, not stay with. It's a firm you never grow with. It's a firm that will grind you into the ground and throw you out when they're done with you, because there is no upside for you with that organization whatsoever. You are viewed as a liability and you want to get the hell out of there. So simple as that. And if that means you're a teacher and your school board or your principal is demanding or pushing you to do this, you are being kicked around and it's time to walk. You have to leave the kids behind. I'm sorry. You got to walk. You've got to move to where you're going to be rewarded for your efforts, because you're not being respected for what you've done. Jen is back. How was it?
There were only 3 other tables there this morning.
Oh, that was heavenly. We've been in this hotel a few nights now, and breakfast room is just overrun with people on the weekend. So
the weekend versus the weekday.
Big difference.
And
good news.
In this city, all the kids are back to school today.
They're back at school in this town.
I shouldn't say all. There's probably some privates that aren't.
Yeah.
But most of the kids are back in school today.
Glad to hear that. Get them back in class.
I'm sure they're glad to hear it too.
Parents are happy. Kids are happy. Yeah. The breakfast room is happy.
The breakfast room is happy.
Right on. That's good stuff, Jen. I'm glad to hear that. That is beautiful. That is beautiful. Bartman is saying, I so love quiet quitting, pulling the plug in December and have no idea why I'm waiting that long. Laughing out loud. What is a quiet quitter? A quiet.
It's a work to rule.
It's like a work to rule, unwritten work to rule campaign. You're not bragging about it. You're not walking up and down your work with a sign saying I'm a quiet quitter. You're just doing the job you've been paid to do. And if they want you to work 6 hours overtime for nothing, you have other plans. I'm sorry, I got to go to a wedding. My uncle
working 6 hours paid.
Yeah, my uncle passed away, and I have to go to a funeral. I have to go to a memorial service. I'm sorry, I can't give you something for nothing. Sorry, I'm not playing that game. There you have it.
Yeah, I'm just not working overtime. Hire that other person that should be.
That's right. I'm not going to do the work of 2.5 people for just my salary. I'm sorry. You're gonna have to hire another 1.5 people now, because I'm not being paid for this extra money. And you don't have to say it. You just don't do it. And there you have it. Coyote, when I put my last 2 weeks in, my boss went off on me. I just sat there on the phone and asked if he was done. He hung up on me, and then they ghosted me for 2 weeks. Is that quiet quitting? I think that's getting rid of a problem. I think I understood it, says Tiff. Alberto, Coyote, you gangsta. Says quiet quitting is doing the bare minimum work, not to get fired. Larry, good morning, Jen. Michael, so just doing your job. Exactly. Alberto, Tia, is it bagel time, Auntie? Is it bagel time for Bruce?
I was looking at him. I was thinking, should I bring you a bagel that had cream cheese down there?
You could have brought me a toasted cream cheese bagel.
I don't think I can shove it in that toaster, but I could have given you a room temperature untoasted bagel with cream cheese.
Room temperature untoasted bagel? Ooh, that's an abomination. I don't think so. No, maybe not. Maybe not.
Or tomorrow. Today they have pork sausages and turkey sausages.
That's an abomination too. turkey belongs Thanksgiving and
Well,
Christmas dinner,
I'm pretty
and
sure
that's
the
it.
turkey thinks so, but
Or sliced turkey with gravy and mashed potatoes at dinner. That's it.
What are you going to do with the turkey's lips and earth holes? If you don't make sausage with them.
I live with this. I live with this. Oh, I already. Alberto, it only served to confirm my decision to walk shares. Michael, yep, not going above and beyond. The credit savage, quiet quitting, laugh out loud. I came into my office rapping, hit them up by 2-pack, and I was, as I walked by the director's open door. Now I get called in to work weekends. I finish my work 2-3 hours, and I get paid for 3 times the amount of money. JJ, I've always subscribed to the quiet quitter philosophy. Alberto, Coyote, good for you. I'm almost ready. Alberto, the credit, he's laughing at Credit Savage. Credit Savage, oh, I definitely brag about it now, Uncle Bruce. What are they going to do? Fire me? Oh, yeah, like as if. Coyote, quiet quitting is a manipulator speak for having boundaries and refusing to be exploited. Apologies to all the exploiters out there, but times are tough. Exactly. Do not get taken advantage of. That is the key right there. Do not fall for that. Oh, you got to show loyalty to the cause. Bunk. They'll dump you in a micro minute. They had a chance. I don't know if these markets can handle a bagel after all this time, says Coyote. Tiff, my last employer was a bit shocked that I quit. I didn't get a raise in 3 years. I asked 3 times. Really? He was lucky that I couldn't quit earlier due to my wife. Isn't that amazing? Alberto, sorry, I started a dispute. It's all fine. LL number 189. Credit service. I'm an independent contractor. Now I gladly will come in and do the work, but I'm gone as soon as I'm done. And I love telling the kids at work they're there to learn as much as possible and then do the same. Splair family, it's dropping. Finally, it's dropping. Maybe I can keep $20 for my SoFi call. Sounds like me when you're describing that quiet quitting thing going up.
One of the best answers I've heard where they're giving you a sample conversation where your boss is saying, so and so quit, and we're going to need you to take up some of the slack, so you might have to work some overtime. And you ask them, well, what will you be paying the overtime at? And they're like, well, no, we thought you would just do that to help the company, as a volunteer basis. And you say, I already volunteer at my church, my child's school, my community, and I find it so rewarding, but that uses up all of my volunteer time. And then you stop talking because
first person who speaks after that loses.
That's right. We know that.
We know that game.
Do they know that game? First person who talks
loses. Exactly. Never be the first one.
And it's so hard. It's so hard to sit there and be quiet. Well, especially if you're a speaker like myself. But yeah, first person to speak.
Exactly. You gonna slip by here?
I am.
Okay. Jen's gonna slip by. Check.
Here's
what she looks like. Take a look.
Woo-hoo, look at those feet.
Woo, look at that. Yay. You see her? Isn't she great? She's just like Jennifer Aniston. It's incredible. Can't believe it. Too many obstacles at my job. My morale is low, says What's Cooking Wendy. I just can't bring myself to do more than I'm supposed to do. In the 90s, we called this phoning it in. There you go. Wing Commander sold all my ETFs except one, which I can't sell online. What is this, 1985? Alberto, Mike H, loving those 7.5s. JJ, excellent suggestion, Jen. Alberto, you are loving. Let's see, Michael. Alberto, I bet. Nick, the rising nail gets hammered first. Fun fact, after my shenanigans, strangely enough, people at my office get Friday pizza parties and they got a 9% raise. Strange how there's never money for stuff until people just start to leave. Laugh out loud. Lame duck. Bruce, when I worked, I told my employer that I was going to give him 100%, 120% for the week, 40% Monday, 40% Tuesday, and 40% Wednesdays, Thursdays, Fridays. That was my days. So don't wake me up, buddy. There you go. Lame. I am, says Alberto. I am. Good thing Uncle Bruce wears pants today, says Tiff. The way he's angling that camera down all the time. Could just be a towel. You don't know. Maybe it's a piece of paper where I painted a pair of pants and you don't know. You can't say. Yeah, interesting stuff about phoning it in and or quiet quitting. I highly encourage all of you out there to deliver what you're paid for, because that's all your employer is doing to you. They're delivering to you what they agreed to pay you. You're agreeing to pay me for 37 and a half hours a week. I'll give you 37 and a half hours. They'll be quality hours, but you want 47 and a half hours a week? What's that, double time? Isn't that double time now? Yeah, I would say. Yes,
and one
ma'am.
more thing.
Yes, ma'am.
And then I really am going to leave soon.
Soon.
Performance reviews. Performance reviews are for you and for them. They're going to say, I know I saw my hand. Woo! This is for you to rate the performance of your boss and the performance of your supervisor and the performance of the company. This isn't all about them talking about you. It should be at least a 50-50 of what you expect from the company.
Exactly.
This is your time.
And if you've asked for a new office chair and you never got it, or you asked for a new monitor, or you were promised this or promised that, didn't get it. Yeah. Or
your computer keeps glitching out and you keep phoning IT. You have no idea if your supervisor actually knows that.
Right.
The IT department does, but they're not necessarily going to run to her and say, hey, we are screwing up so bad on this Dell's computer.
And if you were hired and HR talked to you about the advancement opportunities that were thrown at you,
or
and
the education.
That was one of the reasons you joined, and now you're still stuck at the same level. You now you can put them on notice.
Yeah.
They put you on notice that the next 3 months we want to see improvement for this. You can put them on notice the next 3 months. I want to see this.
And you can ask for your next performance review to be in 3 months, not a year.
Not a year.
To see that you can now sit down and have a chat. And it's a formal chat, but that only means it's a scheduled chat.
That's right.
To go and talk with the powers that be.
That's right. You have to be assertive.
You are the power.
You're the power. That's right. You have to be assertive for your upside. Yeah. No one else will come to bat for you, especially when you're in a performance review and there's 3 of them and 1 of you. It's 3 against 1. You better have your notes figured out in advance. Take notes with you.
And practice with a friend.
Talk to a coworker, at the bar or at a coffee shop somewhere a week before, or talk to a coworker that had a performance review a month ago, a week ago. How did it go? What is it like in there?
Stressing?
How was it for you? And that'll give you the heads up. Be prepared. Absolutely.
That's right. Okay, I'm actually going to go be quiet.
Okay, Jen. Thank you. No worries. It's all good. I'm just glad she's not hitting. I'm just. There you go. Thank you, everybody. Alberto, Tiff, I can't remove that image now from my mind. Thanks a lot, buddy. Alberto, you're welcome, says Tiff. Grant Savage, I think we should thank God Uncle Bruce is actually wearing anything down there during the cowboy shoot. Anything. Zed, good morning, folks. Uncle Bruce, I'm the thumbs up 194. Thank you, everybody, for these thumbs up. Blair, when I start a channel like that in 40 years, then I won't wear the pants for sure. It's the feeling of freedom you give away wearing the jeans, Blair, maybe you'll wear a kilt or something. You could wear a kilt, still, appropriate clothing, I suppose. 195 thumbs ups are in the house. We only need 5 more to get to 200, everybody. Thank you so much for helping us out. Nail those thumbs ups for us. And let's see what's going on. Absolutely wunderbar. Love it. Thank you all, and welcome to the party, pals. It's nice to have you here. I've got 12-cent gain on Rocket Lab, 4 on SoFi, 27 on GameStop, 8 cents on AMC, but a 53 cents loss on Ape. We're up 4 on Matterport, down a tenth of a penny on ME. Or is it a penny? We're down a penny on ME. Spire down 4. ATI P down 1.5 cents. Smart Rent down 6. Xterra down 11. Apple down 149. Goldman down $2. Cisco down a quarter. Tesla down 4.49. ARC down a dime. Microsoft down 2.56. Bed Bath Beyond up 28 cents. We got Pfizer down 49. HPQ up 34. Carvana down 89. Twitter down 23, Google down 17, and Amazon down 18 cents. That's what's going on. Not a lot It's a flat at this point market. But again, we're watching how this is going to play out this first few hours, because we had the 1,000-point drop on Friday. We're down a couple of hundred here this morning. Now we're down 169 on the market. And it would not surprise me to have the first hour drop off and then a little bit of an attempted recovery. We'll see if there's much to it. See after a few hours whether the recovery has any oomph to it at all, or will it just give it all up? And then we'll see what gives. That's the deal. Will we go lower? Perhaps, but not in a straight line. We've got to really work through this. We're down 214 on the Dow, down 23 on S&P, down 75 on NASDAQ, about 2/3 of a point roughly, and oil is up 221 at the moment. And that's what we've got going on right now. Welcome to the party, pal. There it is. Let's see. Nick, always work with industry standard tools or software. Do not get comfortable working with legacy tools or software. When the downturn occurs, you will have marketable skills. Alberto is smiling. Bleacher Creature, Uncle Bruce, didn't you and Jen work at the same brokerage? Were you together yet? And if so, how did those reviews go? That's right. Yeah, I was the boss. Yeah, that was unique, because that would have been about 1985, 6, 7, 8, somewhere in that range there, or up until the end of 87. And Jen joined the business in the mid 80s, and she knew a lot about the business because she was hearing it from me since 79. When I got into it, that Jen became licensed, I think, in 85 or 86, and she was a desk trader and a stockbroker for a couple of years. And I'll tell you, it was great having her in the office. And I'll tell you, my staff, generally speaking, didn't mind it. I'll put it this way. There were two camps in my office. There were two camps, those who loved it that Jen was there and those who hated it. And the haters were the ones who were not wanting to play ball all along with the firm's philosophy and our game plan, because we were in an oil town, and I wanted to run a brokerage firm sort of like how Merrill Lynch would run a brokerage firm, or Bank of America, or Goldman. We wanted to do long-term investing for our clients and build their wealth creation, and we wanted to build their values up for retirement. We wanted to help them reach retirement. Where I had others, I had a lot of my staff on board with that. They were absolutely on board. Then I had staff members who were not on board with that message. They wanted to be the hot shot day traders following the hot stock that was going to go to the moon, because they were not interested in putting in the work and the effort to build a book of clientele and become the family investment advisor for the next 15, 20 years. These guys were looking for a score. They wanted fast women, fast cars, and a fast lifestyle. And they figured that going out and drinking at a bar in the afternoon and visiting with promoters, that was what it was all about, because these guys were always having a party and they wanted to party. And over the months that I became manager and ran the firm, slowly but surely, these guys would leave, one here, one there, one here, one there. And I would keep bringing in new candidates to join our firm that believed in the long-term game, because that was the only way to survive and make it a career. I wanted career stockbrokers. I didn't want 5-year wonder boys that would blow themselves up and lose all their clients' money. And all I have left now is an empty desk and a bunch of upset customers that were told to buy these stupid stocks. And I'd seen enough of it. From 79 to 86. I'd seen time and time again guys blow their clients out of the water and be unemployed and eventually be selling, carpeting or working at a gas station. And, no longer a broker. And so with Jen around, the message was the same. With Jennifer, it was, we're here for long term. We're not here for a quick flip. And so slowly but surely, the office turned over and turned over and turned over. We were ahead of our time. We were doing this in the mid 80s when Reagan was in office and George Bush the senior came in, and it was all about making fast money in the hot stock market. That was what you saw in the news all the time. You saw these young stockbrokers that were 25, 30 years old, living for today, making all these bonuses in New York on the latest, hottest thing. And my management, my direct management, our philosophy was, we're going to do what the banks are doing. The banks are buying brokerage firms and turning these people into retirement builders. And the clients are yours for the rest of their working lives. And I was saying to my guys and girls, you can make a really good living with 300 or 400 clients, 1 or 2 assistants to help you handle all these clients. And you can get your 2 to 4 weeks of holidays every year, 2 in the winter, 2 in the summer, and you can have a real easy time of it. You don't have to worry about wondering about the hot oil stock that went from $1 to $3 and is now back to $1.50. You don't have to answer those phone calls anymore. You don't have to talk to clients that you talked into buying stock at $5 that's now trading at 50 cents and explain to them why they're getting their brains handed to them, because that company never had a chance of success. They have no money, no prospects. It was just a promo job. Where over here, these guys and girls, they're talking to their clients about wealth building retirement accounts, tax-free strategies. You're going to seminars for retirement seminars, how to talk to your clientele and set them up for retirement. And then you're meeting with your clients one-on-one and regurgitating all this info, and they're just looking at you going, you're my guy. You're better than you're like a private banker. This is fantastic. That's what we were doing, at least we were trying to do in the mid 80s, when the market was just live for today. Who cares about tomorrow? Credit, new idea. Welcome, Buck Naked Bagels with Uncle Bruce. Now we're talking. Blair, in the Scottish way, maybe an idea. The reviews were just Uncle Bruce and Jen sitting across from each other at a Coco Bolo desk, staring at each other like JRB. Uncle Bruce, at what point does a person sell the deep in the money call when doing the poor man covered call? Well, I'm of the thinking that you don't want to have a covered call with less than 3 months left to live. You don't want to have a deep in the money call with 3 months or less left on it. So when it gets down to that 90 to 180 day window, you're now studying ways to roll over into a future call. The ideal scenario, of course, is that you bought the covered call at $10 a contract, let's say $15, whatever price you paid for it, and you can get just as much for it now, a year later, and roll into another $1,000, $1,500 call a year and a half further up. That would be the ideal move. H. Gregory, Uncle Bruce has been dealing with this moon talk since the 70s. Wow, everything repeats itself. Oh, yeah. Oh, God, yeah. Just to be sure, aren't we all now turning into holding companies? I mean, really, Trish the Dish, Jen hooked up with the boss. Well, before he was the boss. Yeah, so she hooked up with the rookie. She hooked up with a guy still in college. I guess she saw potential. I guess that's what it was. It was, well, this guy might make it. Well, we'll see what happens with this guy. He did become the boss. He did. I was branch manager at age 26. I was branch manager and VP at age 26. Yeah, I was early. I was really early. Then I took a company public with my good buddy, and I was 33. Yeah, 33, 34. I was president of a publicly traded company at that age. So by the time I hit my 40s, boy, did I have experience all over the place. Oh, my gosh. Ended up in the Cayman Islands with all that experience behind me as well. very, very helpful. And of course, here we are today. I'm just regurgitating this experience to you guys. Here you go. Michael, assistant to the branch manager, Farmalus became a YouTube member. Farmalus, thank you for piling in. I think Farmalus is rejoining us, and it's great to have you, pal. Love the tuba there. Fantastic, man. Thank you. Coyote, you don't want to know what I was doing at age 26. You don't want to know. You don't want to know. Yeah, I was. It was amazing. I was 26, and I had 45-year-old stockbrokers that I had to supervise, and then I had 35-year-olds and 30-year-olds, and then I had the 22 to 26-year-olds as well under me who were raw rookies. It was a most interesting time, to say the least. Being in Calgary at that time in the mid 80s, the city was so young. I mean, we were just so young, and I was the youngest, probably the youngest branch manager VP in the province at the time, I'm sure. Coyote, you don't want to know what I was doing at 26. Sorry, I already said that. Anyway, it was an interesting time, and I look back now and I see 30-something, 40-something financial advisors is a loose term because there really are no stockbrokers left anymore. We're done for. The kind of branches we had and the kind of locations we worked out of, gone. You now find financial advisors in a few offices, but they're generally connected to banking institutions and that type of thing. And it's all different. It's just all different. Yeah. Mirko, hey, Uncle Bruce, just sold 5 GameStop 31 covered calls, September 2nd expiry at $1.40. 5 more for 531s for September 9th at $2.54. And I sold 4 HBQ 32s September 2nd, this Friday, at $1.09. Now let's see what happens. Here we go. Right on. 31.68 on the GameStop. Well done. Writing 31s and 32s, or 31s and an HBQ 32s. Right on. Taking the dough, and let's see what can happen here. Why not? 31.57 on HBQ. Right on. Nice short-term contracts. Beautiful job. Nick, Uncle Bruce, if you were the founder of a company, you must have made a boatload of money and must have had a few houses. Well, we took a company public from scratch, my partner and I, and we raised all the money we could. We sunk our own dough in there. We went public, and we worked the company for several years, but we ended up with a company that was successful on paper, but not successful in cash. And we ended up separating our public company into 2 divisions. We had the public company over here, and we had a private company created here, which we spun out. The private company we spun out was technically worth 0 money. And so we left the public company as a shell without any debts or obligations. And what we ended up doing was we merged a private oil and gas company into our public shell company that had a bunch of shareholders, my relatives, friends, clients, associates, my buddies, pals, and everybody else. Those merged together into this, become a public entity, kind of like a SPAC, and the good news was that the private oil and gas company wanted to go public, had a brokerage firm that wanted to help them raise money, and the brokerage firm is looking at this public company, clean shell, and the private co arranged the merger and then helped fund them with cash to take the oil company forward. The good news was that for my shareholders, all of the shareholders that I had in the public co, they all became successful as shareholders of a up-and-coming oil and gas company that was well funded by the backing of a brokerage firm. The bad news was that in order to make all that happen, I had to give up my stock. My partner and I, we had to walk away from all the shares we had and in effect turn it over to the new guys. And I had no economic benefit from it. The benefit I got was I was able to forevermore go anywhere I wanted in this town and not have anyone go, "Oh, you're the guy that made me buy that crap and I lost everything." Instead, "Oh, you're the guy that reorganized that company and I made a ton of money because of you." That's what I had to do. And so I took that road instead of the "I'll hold these shares and hold nothing." I'd rather hold no shares and all of my friends, relatives, and the clients are all doing well, and makes life a lot easier. And that's what you got to do when you take the high road. And that's what I did with my business partner. We took the high road and we went on to other ventures. He went on to his businesses. I went on to mine, and we're fine. We're all fine. Coyote GameStop saw my bids and said, "No, thank you," and did a 180. 31.56 on GameStop. JRP. So when a contract expires worthless, out of the money, then on the Monday after expiry date, it will not show on my account anymore. So if you write a call against a deep in the money call, and it expired, a Friday night rolls around and that contract you wrote is out of the money, it has zero value Friday night. Monday morning, it isn't even in your account anymore as a short position. All the premium money you received when you sold it is in your account. It's all yours. Keep all of it. You want to write a new contract? Write a new one for the next Friday, for that Friday coming up. Absolutely. Rinse and repeat, my friend. Rinse and repeat. Yeah. Yes, that's correct, says Nazareth. Sweet, he says. Zach, I'm thumbs up 218. Olivia, I'm number 219. Thank you, everybody, for being here. Thank you for these thumbs ups, everybody. Hope you don't mind the old stories from way back when. Stories from 40, not quite 40 years ago, 30 plus years ago, stories about the markets. Unreal. Double sweet, says JRP. Yes, it is. It is double sweet. Yeah, stories from yesteryear about how it used to be in the markets. There were always, and there always are, the companies, public companies that go under. I mean, there's no secret that companies succeed or don't succeed as public entities. It's a question of what does management and ownership of these companies do with them at the end of their lives. And if they are desperately in the red, then they are left to die and they may never relist again. In our case, we had a printing publishing business that was generating revenue but had government-backed debt, and we had obligations to maintain for a few more years. And we just felt that we had run the course as far as we could go within the public company. And we realized that even if this publishing company lasted another 2 or 3 years inside the public company shares would be effectively trading at a penny or two a share. There'd be no upside for the shareholders. And we also knew that being a public company, you have monthly expenses, listing fees, transfer agency fees for the securities, all kinds of expenses that you run as a public company, auditing and so on. You have to have a shareholder meeting. You got to do quarterly reports. Well, when you have nothing to talk about, it's expensive to just produce all this stuff for no upside. So we thought, why don't we turn this public company into something more meaningful? But we didn't have an asset that we owned to put into it to take it anywhere. So this is where we put the word out that we have a publicly traded company that is going to be a shell. We're going to make it a shell. It's got a listing, it's got shareholders, and it is now ready to be acquired. Hang on one sec, everybody. Here, check out my pants. What do you think of these pants? Wait a minute. He's not wearing any pants. Those aren't two pillows. Okay, we're back. And so we ended up putting the company up for the best offer. We had about 8 different groups come to us with offers. And a couple were oil and gas, a couple was mining, and some other stuff. And we ended up being approached by the one party we ended up dealing with. They made the best offer that we felt would be the best for the shareholders, our shareholders. We had 250 of them that we had to look after. And we ended up it worked out so well that it worked out way better than we thought it would work out. And at the end of the day, what we didn't know and we couldn't have known was within 6 months of the deal being done and our old publishing company now being an oil and gas company, oil and gas prices took a shot way up, and it was a boom in the patch for a while. And so all of a sudden, every junior oil and gas company, medium sized, they were all into the chips. They were all making dough, and we had investors in there. I had people in there at 20 cents a share, 40 cents a share, 60 cents a share. We went public at $1. And then prices from like $1.10 all the way down to a dime. We had them all in there, and some walked away, some didn't. And then we did this merger. And the merger, we started off at 75 cents a share when the last time our shares traded, they were at a dime. They'd been halted for like 3 months while we did all this reorganization. They opened up around 75 cents a share. And within a few weeks, they were $1, $1.25. So that every single shareholder investor that I had ever told to buy this company they were all making money. Every single one were now ahead. And they were always calling me. I said, what should I do? What should I do? I know you don't own it anymore, and I really appreciate what you did for us, but what should I do? And I would say to them, sell half and keep the other half, taking money off the table. How can you go wrong? And I remember one night I tracked down a shareholder I hadn't been able to find for the longest time. And he owned, I think, 20,000 shares. I think he had 20,000 shares, which he bought at 40 cents 3 years earlier on a private placement basis. As we were still private, we were going to go public, and he bought in. And I tracked him down in the UK and phoned him up, told him the whole story, what had happened. I said, I got good news for you. Here's what's going on, blah, blah, blah. By the way, the shares at that time, they were trading at $250. I said, your 20,000 shares are worth $50,000 now. And he went silent. He said, oh my God. He says, hang on a second. And I can hear desk drawers opening up. And he said, I found them. I got an envelope here in my desk. They're in the envelope. I've got the shares in my hot little hands. So I said, well, take them to your investment advisor. I got one here. I said, take them to your office and deposit them in. They'll have no trouble converting the shares into the new company. And then you'll be able to sell them in a couple of days if you want. And he could not thank me enough. He said, you were always a straight shooter with me all those years. You always said you'd work it out. There you go. That's how it worked. That was way back. That was that is now 1993 history, 1992 history, 30 years ago. Yeah, 30 years ago. Isn't that something? Something how that all changed over the years. And amazing. Anyway, thank you, everybody. Have you talked about the Cyxtera and why it's dropping? I haven't talked about it. We were under the impression that Cyxtera was trying to sell itself to the best bidder out there. I guess they couldn't find a buyer, I suppose. They're now $6.60, down 18 cents. I honestly don't know. I've had a lot of people sell them over the last 6-8 months at $11, $12 a share. They reached a high $15.42 back in May of this year. Here they are, $6.60. I have no news. People are writing options against them, trying to bring in some income on them. So if you're writing 7s or 750s or 8s, bring in some cash. Get your capital out, that kind of thing. That's all I got. I got no news. I have nothing from this company. I think they're sitting on cash. They're expanding their business. They're a data processor with data farms, and the stock's at 660, which is just, what can I say? There it is. Nick is saying, I love that crotch shot you put together there. The show is X-rated today. Karen, the stories are great. They give us perspective. Olivia's laughing. Touchgrass, okay. GameStop, spicy. GameStop going up. We're at 32.12. Time to write more contracts. Beautiful. If the stock wants to go up, fine, let it go. The question is the market going to go up? We're down 146 on the Dow. And do we lose now 300 or 400 from here later today? Like, do we have a little climb back, as I suspected we might, and then we drop again because we dropped 1,000 Friday? This isn't over. We'll see. Dead cat bounce for GameStop. That's possible. We've come from 45 down to 29. Not unreasonable. The low today, 30.39. Pre-market, we're 29.80. We might drop yet again. The volume, 1.6 million. That's 400,000 pre-split. We're not going anywhere. We're not going anywhere. Unbelievable. AMC's down 18 and Ape shares are down 29. So that's a, what a 10 cent, 12 cent drop on the day there. SoFi up, down 7. ME down 5. Matterport down 2.5. ATIP is up 2.5. It's turned around. It's at 95 cents. Rocket Lab down 9. Smart Rent down 2. Spire down 3.5. Sextera down 12 cents. BBBY up 66. That's where we're at. Apple down $1.08. That's what we got going on. There's where we're at, kids. Miss Jen getting ready to roll. Right on.
I'm leaving you.
Yep, she's leaving me. This
You
is
get
it.
the children.
Yeah, I get the kids. That's you guys. I get the kids. I got the kids all to myself. What can I say? Just me and the kids. Oh boy, oh boy. Fun times with the kidlets. Oh yes, 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 yes. Fantastic. Tiff, someone is keeping SoFi from dropping under 6. Volume is high again. Well, it's 610 right now. Volume 13.8 million. Would like to see more, but it is what it is today. It is what it is. We're down 154 on the Dow, down 10 on the S&P, down 31 on NASDAQ. Oil up 282 a barrel. Moon. Good morning, Zach. Yay, Daddy Bruce. Tiff, I hope SoftBank will run out of stock soon. I think they have. I really do. I think they're done.
Daddy.
All right, Jen.
I'll text you.
Go get them. Go get them. Right on. Jen is on her way. She's got a medical appointment today, so she's taking an Uber to get looked at while I'm doing my thing with you guys, hanging out. Thank you all for being with us today. What is going to happen with this market? As I say, we're off 154, down 1,000 Friday. There's not a huge wave of buying coming in to say, let's get into this market. That's not happening. So we're going to have to see if there's more downside coming. I think there is. That's my gut feel is there's more downside to come. But it's not necessarily on SPACs and GameStop. Yeah, GameStop will be under pressure. I don't think it's going very far. But on the big stocks, watch your IBMs and Apple and HPQ, Cisco, Pfizer. Keep an eye on those guys. I'm showing Tesla down 297, Pfizer down 36 cents. Boeing's up a quarter. Well, up 11 now. It's going lower. Apple 126 on the down dip right now. HPQ is up just 17 cents. Cisco down 6. Twitter down 5. Home Depot down 258. Carvana down 90. Vanek down 77 cents, down 88 cents. IBM down 14 cents. Microsoft down 179. Goldman down 296. Google down 20. Amazon up 3 cents. Meta Platforms down up 40 cents. That's the old Facebook. BlackBerry up a nickel. Royal Caribbean down 16. Target down 99. JP Morgan down 78. Costco down 282. Walmart up 30. Nvidia down $1.89. Disney down 31 cents. American Airlines down 12. Netflix is up 474. Moderna up 94 to 137.64. So not seeing a lot of massive upside coming into this market. No, we're down 163 on the Dow, 13-point drop on S&P, 40 on NASDAQ. I think the odds are a down day today. The question of have we reached the best level we're going to get on a bit of a recovery wave here? Hasn't been much. Where will we kind of hang out at here? For the Dow today, the high, 32,188 points, and the low 32,006. So we've really had a 182 point range today on the Dow. We started at the low, and now we're near 32,114, down 168. So, we've been about 60 points better than this to be down 110, but that's as good as it's gotten. Now, it looks like it's been a two-step, one-step, two-step range going higher so far. The question now is, are we going to drop lower than the recent low and reverse this now to a two down, one up, two down, one up? We'll watch this as the day wears on. And you can join me later today at 3 o'clock Eastern for the final hour of today's trading, and we'll close it out together tonight and see where this market really takes all of us. I see now the Dow down 244. So, we're slumping again. And if we break through the lows, which are only 32 points away, then we're going lower. This could be a computer sell program. It could be just a test. I don't know. But we are definitely running into some sell waves, and we're going to, see some volatility with all that. Good luck to Andy Jensen, Zach. Exactly. Uncle Bruce, credit service. Do you think it's a good idea to sell some 50 SoFi covered calls for January 2024 on the next run up? Jay Powell seems to be interested in crashing market. I think it'll cause pain all next year. Well, again, it's a comment you're making on the markets, but you're asking about SoFi, and there's the disconnect, because SoFi is not the overall market. SoFi is its own entity. SoFi is an exploding company in growth, cash flow, revenues. So it's unfair to say Powell wants to crash the market. Should I short or sell off SoFi calls? The stock's 607. I think the stock can run to 8 faster than the market, can move up 25%. I mean, this stock goes up $2. That's a 1/3 gain on this stock. I don't see the Dow going up 1/3 at all. So SoFi has upside. The rest of the market is stagnant. So writing on SoFi could be dangerous, although rollovers are always a possibility. But at 610, I wouldn't be a writer. No, I'd be more at a writer at 750 to 8. And even then, I'd want to see how fast we got there. Spare, I wish you all an enjoyable and relaxed day. Interesting idea, credit. Why 2024, not 2023? There will be runs next year as well. Sell my house. European markets just closed. Quick, slick, sick. I have 70 sold for 2024. Zach, I just sold my first ever GameStop call for this Friday, September the 2nd, with a $34 strike. Asked 69, and they threw in an extra pennies. So excited to be in the GameStop family. Right on, Zach. You're in there, baby. And we're at 31.88 on the stock. The shares hit a high today of 32.75. They've already backed off. You're writing an out-of-the-money call. You can keep an eye on this market. Boy, pardon me, if you put in a stink bid of 21 cents or 16 cents or 11 cents, see if you get hit on this. Let's see how it goes. Way to go, Zach. Welcome to the party, pal. Writing on GameStop. Right on. If they take you out at 34, plus you get to keep the 69 odd cents. So you get 34.69 if you get taken out. You can always buy it back and get back in. But hey, 31.27 is where the stock is at. It's only up 33 cents. So way to go, buddy. You're in the trade to win, and that's what it's all about. Looking to win. Keep it going. A WD, Bruce, I have 3 put spreads on Apple. September 16th. Apple was at 170 when I entered this. They're now 162.50 and the 160s. What do you think? The 162s and 160s. What do you think about this trade? I'm curious to know what you got, how you doing, where you're at. If you're doing well, if you're ahead of the game and you're happy with the return, great. and then roll into another spread if you want. Always doable. I personally think Apple has more downside to it for the moment, but not every 15, 20 minutes. I mean, I'm talking overall, there's downside, I think. So you've got to decide for yourself, how you're doing on these trades. And are you satisfied with the return you have or the risk reward you got going right now? It's your call to make. But well done, sir. You've made your move and you've taken a position. The stock now is 161.44, down 218, according to my quote machine here, which means we're approaching the low of the day of 160.65. So there you have it. Keep an eye and see what gives. Quick 6. The calls I've sold, my theoretical exercise is 820. So I have room up for up moves between now and 2024. Well, there you go. Quick 6. You'll play that one by ear, of course. No problem there. We're down 224 now on the Dow at 32,058, approaching the low range of our day here. And we're off 18 cents on the AMC. We're only up 72 on GameStop. 31.66 a share, up 72 on 1.8 million so far today. And that's where we're at, everybody. It's 2 hours, 5 minutes into the show. I'm going to say thank you all. Quick sick of saying the calls I've sold at my theoretical price. I've got moves. Oh, way to go, man. This is good stuff. We just did that. Thank you, everybody, for being with me this morning, hanging out with me as we are running Monday today. I got 3 more shows to do, 2 on my other channel, 1 more here. I'll see you this afternoon at 3 o'clock Eastern time for the final hour of trading today. We'll see how this market works itself out, where it wants to end up on the day. Congratulations, all of you option writers. Thank you again for all of you out there who took advantage of the 4 for 3 deal last week or 2. Appreciate that. I hope you're all studying your classes. If you want to have a one-on-one with me, let me know when you'd be available. Sunday coming up, and we'll try to find a slot for you, and we'll take it from there. We'll get together and have a chat on how you're doing and what you're up to. Thank you all. As we see now, the market down 254 for the Dow. We're approaching the low of the day. We're about 23 points away from the low of the day on the Dow at the moment. We're down 29 on S&P, down 97 on NASDAQ. NASDAQ 0.81 of a percentage point, the Dow 0.80, and S&P down 0.72. That's the deal at the moment as we're coming in on the lower end of the trading range for the day. 31.40 on GameStop, 31.37 now. Going a little lower, 31.36 on GameStop. Still up, but only up 42 cents. The high for GameStop today looks like it was 32.75. 31.34 is where we're at. That's $1.40 away from the high. Much closer to the low than the high on the day. 31.34, up 40 cents on GameStop, as selling seems to be coming in a little bit more at the moment. John is saying thanks, everybody. Larry, thank you, Uncle Bruce. To see you all in the afternoon. Credit Savage, thanks, Uncle B. I was just in need of capital. I was thinking of selling $20 SoFi, $20 covered calls, and making $1 a share. Gotcha. I hear what you're saying, but 31.29 now at 31.26 on GameStop. We're backing up now, up just 32 cents as the shares are beginning to back off a little further. And we'll watch the final hour together later today. Thank you all. The Dow now down 264, 269. We're 7 points away from the low trade of the day, the low or level of the Dow on the day right now. It looks like that's what's going on this market. 264 is the drop to 32,019. The low of the day, 32,006. That's what we've had so far, okay? Zach, that covered call is already ahead 25%. Wow, this GameStop Ride is the coolest. Having a money-making day, everybody says, sell my house. Bama Babe, phew, just scored big on SMH. Market going down. Yes, it is. We are backing off on more stocks. And so these calls keep dropping on you, which allows you to check out profit opportunities. Stink bids have to be made, and you never know. You might get hit. Remember, stink bids save lives. Well done, everybody. Keep it going. Keep up the good work. All right, guys. We'll see you a little later today at 3 o'clock as we get ready to close the final hour together. Have a good one, everyone, and we'll see you shortly. Bye for now.